you kind of made a point on low interest rates, and in Europe we're seeing negative interest rates. What does that even mean? And could we see that here? And if we see that here, what does that mean for real estate?
Yeah, so what's that mean? Negative interest rates basically just means that the bank is lending you money, and over the next 30 years you're going to pay back something less than you borrowed. In effect, they're paying you to use their money, which sounds counterintuitive, but it's happening. Right now, globally, I think I saw the number was around $15 trillion of existing debt is trading with negative interest rates. What was the second part of that question?
What would that? No, I guess it's this. Has that ever happened in the U.S.? Has that ever happened in Europe? Has that ever happened? Period.
I don't believe it has. I think this is something that's new. I'm not aware of any time in history that that's happened before. It certainly hasn't happened here in the United States. And I think you asked, could it happen here? Yes, it could. So if we're looking forward, there's a growing number of analysts right now that are projecting that we will see negative interest rates here in the U.S. In the next few years. Can't say with any measure of certainty, but it's possible.
What does it mean for real estate? Is there a scenario where we take out loans that have negative interest rates?
Yeah, that's a possibility. So I think it's in Denmark right now. It's actually possible to take out a mortgage with a negative interest rate. In concept, it could happen here in the U.S. as well. Of course, if that did happen, that would mean real estate, would prove to be really attractive at a 4.5 cap rate. So, the way real estate gets priced is based on that cap rate. So, what kind of cash flow is the property generating, and what do I demand as far as in effect like an interest rate versus that property. So, if mortgage rates are 3% and I can get a property at 4.5, 5, 6%, and I can capture that spread, that generates a return. Well, if you take that interest rate way down to a negative rate, my cap rate can come down and it can still be profitable. And so that would create opportunity for real estate prices to rise meaningfully from here.
So does that mean, so a lot of cases when we see interest rates starting to rise, we see cap rates softening, right?
Correct.
So if interest rates go negative, could we see cap rates go to like an all-time low as well? Will they follow it like they do when it rises?
It certainly could happen. I would say the reason why I have to hedge there and say could is a lot of times what we see is risks get repriced, and so the spreads might widen. But assuming the spreads hold constant, which is a big assumption, but if they did, then you could see cap rates drop meaningfully.